Hello everybody, hope you're doing very well and welcome to this evening's Contenders live stream after an amazing day, let's be honest, of Bitcoin trading. Yeah, it's going to be a good one today where we're going to be starting with Dash, obviously chart of the week, which I threw out a bit of maybe you probably caught on. It was obviously over on Bitfinex on the USD pairing. Yeah, obviously that was yeah, chart of the week, and then I want to go over Ren because obviously Ren last week, as we were talking about at the end of or the start of last week live stream, I guess that Ren position that we were looking to fill, obviously laddered down last entry below the 0.65, and I'll cover the update of that after I've covered Ren. Okay, then I want to move on to what I wanted to. Today I was actually in the lesson plan I had scheduled to do parallel channels, but then for me to do parallel channels I felt like I wanted to cover trend lines first, because obviously channels are the way you get targets where you have to use trend lines first. So obviously to have, it's kind of a requirement to have trend line theory before parallel channels. So I'm going to do trend lines today, and then next week will be parallel channels. So that in that order. So today with trend lines, I want to go over trend lines. Obviously, you're probably all aware of trend lines, but then some more advanced trend line theory, which is called the three trend line fan break. Maybe you've probably never heard of that one. Not many people trade it. Like, it's not too well known, I think. So it's pretty nice. And then also the 45-degree angle trends, and this is like getting onto Gann theory. So if any of you have ever researched Gann theory, then you'll know like it all runs off of like 90 and 45-degree angles. So yeah, I'll cover that for you as well tonight, which obviously those 45-degree angles link in with trend lines. You have to know, have your trend line theory for that. So it's kind of a core lesson of something. Maybe many of you might already understand some of this, but it's good to cover it in preparation for next week's parallel channels. And as you all know, I absolutely love trading parallel channels. So yeah, next week's going to be amazing. But yeah, then I also want to go over into the second half of today's stream, going over some live examples from trades that I took today. Obviously, last week I went through my scalping strategy, didn't I? And today I want to take any more questions. Obviously, now you've had a week to practice, and I've received, let's just say, a lot of questions about it. About the scalping strategy, and obviously helping people that way, and a lot of people would have waited for the stream. So yeah, if you have any questions regarding the scalping strategy from the week of testing it that you've had, then I'll answer those today. And also I have just some more examples of trades that I actually took today, just to help cement in the idea a bit more. So I've added some live examples from trades today. So yeah, starting with trade of the week, then going on to the trend lines, then going on to the scalping strategy to end, and then I want to end with a recap on Bitcoin and Litecoin, because those are the two main trades that I'm in at the moment. Okay, so yeah, let me just make sure everybody can hear me. Okay. Yep, looks all good. Cool. Yeah, hello everybody. Legendary Bitcoin short call. Yeah, that was pretty good, I'm not gonna lie. Hello everybody. Not even gonna guess the language. Oh, I guess Swedish. Yeah, hello everybody. Cool. Let's begin. So yeah, starting with Dash, this was pretty pretty simple one. Okay, oops, wrong thing. So basically, this was literally posted yesterday. Okay, so yesterday morning we were looking at this. Okay, and obviously being over on Bitfinex, being over on the USD pairing, yeah, just I had a lot of questions about this one as well. Well, not a lot, just one, of saying, is Dash the same, DASH is the same on Binance as it is on Bitfinex? Yeah, they're exactly the same coin. Obviously, Bitfinex call it DSH, but it is Dash. They run it exactly the same price. So it's the same coin. So you could have traded this wherever, really. But yeah, this is obviously over on Bitfinex to be able to short. But yeah, what we're looking at here is, I'll load up the chart now, but basically it was a short entry, okay, taken from basically $95, short-term trade. It's in a macro downtrend, with 97 horizontal holding it down. So I'll load up this chart and just show you, okay. So obviously we had this nice resistance trend line, okay, and on top of that we also had the 55 exponential moving average just sat on top of each other there, okay. So you would like just sat on top of each other, for a resistance, and then obviously this wasn't perfect lining up, but obviously at the same point you obviously had more or less the 382. So that's what I call really like strong resistance. Okay, 382 resistance, obviously fibs from high to low, 382 55 daily 4-hour exponential moving average, and the fact that we had a support resistance level, that's what I call like a really strong resistance. Okay, So I didn't manage to fill it at 97, but I filled it at 95, okay? And then I'll show you what's going on today, because this was a really, really quick trade. Obviously, this was literally posted yesterday, and today we had the movement, so that was pretty nice. And yeah, okay, so today this short was closed. Obviously, it really helped with Bitcoin moving down, let's be honest. But yeah, this was basically, it moved down today, took out the lows, and I'll show you these lows of why this was an important low to take out. But basically, as wrote here, like, we took out the lows, there was zero follow through on the lows, and you started closing back above. So yeah, I closed out of this short, 8% in one day, can't complain really. And I'll just show you the important low that was taken out now. Okay, so this was the important low that price closed, well, tried to close below today, but obviously just took it by the wick. So e.g. swing failure, we're looking at 87.85. Okay, why was this low so important? Because that low, that's the low that gave 112% bounce, okay, or just move upwards. Okay, so if you look here on the 4 hour, it looks really clean. Back. Okay, so what we're looking at is this was the pivotal low. Okay, price moves down, causes this pivotal low that causes price to expand 112%. Okay, a massive pump there, 112%, but that was the important low. And then if we move back to where we are today, come on. If we move back to where we were today, what we can see is price moved down. Okay, I'll show you on the 15-minute. Okay, price moved down here. We come down below the low, come back up, and I closed just above. As you can see here, I posted the screenshot when I'd done it, so I was closing out at around $88. Okay, just above as it was coming back above. Okay, decided to close out of that because there was no follow through. Okay, so I wanted some follow through to the downside if I was to stay in this position, and there was just no follow through from taking that low. And you know, not interested in keeping my short open if that's the case. One, it was only planned for a short term trade, so when I put this in anyway, it was just going to be a short term trade, moving down the stops. Okay, in profits. So I was more than happy to take that 8% in a day, to be honest. In the grand scheme of things, could we argue that this is... let me remove that a second. Could we argue that this is going to be a pivotal low? Obviously, the volume would say that there's likely to be some more downside to come. I think this is it just doesn't seem like it's possibly the end. So I could have held a little bit longer. Obviously, target was down at $77, being these major lows here. So this major level was going to be my target, $77. So I'm out a little bit early, but you can start to see here already on the daily chart, you know, forming a bottom wick. Onto this low here. So yeah, it's the liquidity basically on this coin is awful at the moment, and it's just not great. So yeah, there's just no buyers or sellers really. Obviously there's more sellers than there are buyers at this point, but you know, you're coming into a level. I'd wait to see a close below that. If you close below $87, then you can get a pretty safe short down to $77. So there's another trade in there, but not something I would look to take in the immediate term really. Okay, then obviously on the really lower term time frames, you could potentially get another short here, although this isn't a short I will take, by the way, but you could get into another short obviously on this flip, which might be just above the 382. Yeah, so look at that, you got a 382 resistance sat literally on an SR flip, so you could potentially take another trade here. But yeah, I'm not going to be trading Dash again, but I'm out of that trade and I'll be out of it for a while. I'm not interested in taking that short right there, but yeah, obviously you can see the potential there if you're interested in that short. So yeah, that was Dash. It was I felt it was a fairly easy one. Not too much in it. Obviously, just three factors coming together, and that's what you want. That is what you want, isn't it? If you're honest, when you're trading, you can't really get much more perfect than that, can you? You can't really get much more confluence of reasoning to take a short. Obviously, if we take it from this high or this high, it's very the same. But I mean, that literally is what you call confluence, isn't it? Wow, now we're looking at the 0.5. Oh yeah, of course. That's what you're calling confluence. Obviously, this was the low at the time. I was looking at it like this. High to low, 382 daily, and 55 EMA on the 4 hour. So yeah, that's confluence for me. Okay. So yeah, that was Dash. I noticed that the majority of people actually posted long positions. But yeah, never mind. I guess you can now see what I was looking for, the confluence and all that. But yeah, moving on swiftly. I want to go over Ren. So this was the screenshot from last week, obviously where I was covering Ren, and we had those three laddered long entries, the daily to just below the 0.5 of the golden pocket. As you may recall, This traded absolutely perfectly. We literally moved to just below the 0.5 of the golden pockets. Let me load up this chart because it was absolutely beautiful. Obviously now it's given back the whole of the move, but nevertheless, this is what we were seeing here. Okay, this is what we're seeing. Price literally moved just below the 0.5, just below the 0.65 of the golden pocket. We literally had, as you'll know, in the stream last week, I was saying I was already in the long. So I was already in the long, waiting for another fill. Price literally took by a tick the bottom of the 6.5 and got a substantial move, massive pump to the upside. That isn't what the way that I'd have preferred it to go. Okay, hence why, again, like I did with Dash just now, I also closed out a Ren early as it pumped up. Okay, why did I close out a Ren here? Because we had this, looks nicer on the 1 hour, this downward sloping resistance trend line, down, 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 knocked down again. So what is this bearish market structure? Low, lower high, lower low, lower high. I was more than happy with the way I was viewing the altcoin market, which I'm not particularly bullish on, definitely even less than last week. You know, I was more than happy to get out of this trade. Obviously, target was the weekly level, but to get out of that trade for what was a massively hourly pump like that, 15%, yeah, it's just one that you have to take, in my opinion. And then if price had got above this level and started closing, I think I wrote about this here. Yeah, if price had closed above the high, I would have re-entered higher, as I would have, you know, said to myself, okay, well, my theory that we're going to get, you know, end up coming down with the speed of that pump, and at least retrace down to the bottom of the pump, is obviously invalidated if we had actually then started to close back above here, or especially these highs. Okay, if price had got continuation, I would have entered higher up to still target there, but yeah, obviously I guess now I can say the decision was very good, but in the time, this is like the type of decision that you have to make. Like, price pumps 15, or in the end this was like a 20% pump out of nowhere. When price pumps like that, are you FOMOing and adding into your position, or are you thinking of it sensibly, I would say? And is it safe to be buying into random 20% pumps? You know, that's something for you to decide, I guess. But yeah, for me, it was a get out of the trade, and if it gets continuation, I'll just add back in higher. But yeah, when you start to see that sort of gain in that amount of time, it's kind of yeah, for me, take a profit, especially when it's just a lower high. You know, if this had pumped, say, up to here and you'd taken out the high straight away, well, that's a different story. But you know, in the grand scheme of things, it was just a, yeah, pump, yeah, I guess. So yeah, that was Ren basically. So an update on what happened last week. Yeah, cool. So yeah, that was all that I wanted to cover for those two charter weeks. So they were, yeah, obviously this week's, last week's, fairly easy ones, I would say. Cool. And now moving on. So, moving on to the main focus of today, which is going to be obviously trend lines leading up to next week, parallels. And, oh, I must say, this was beautiful. So this really, really was beautiful. And this is what one can say is really good karma of doing this and helping people out. What was really nice about this is I was doing this, writing all of this yesterday. So I made this spreadsheet for everybody yesterday, okay, going through and making this PowerPoint, and my examples were taken from Bitcoin, and you will never guess what happened. This was really, really great. Okay, so I was just taking examples like here. What do we know? Okay, so I'll go through why the example was great in a minute, but first I'll teach you about the trend lines, the way that I trade them. Okay, so trend lines, really, really, really simple. They are, well, I don't want to, you know, maybe not everyone finds them, but they are one of the most simplest tools, okay? Because all you're doing is connecting a series of lows or connecting a series of highs, okay? Obviously, you can add a lot more complexity to trend lines, which we'll be going through in a little bit, 15 minutes or so. But the very basic form of a trend line, as I'm sure many of you are very aware, is you're just connecting up the lows, okay? And as we can see here, many people are looking for 1, 2, 3 touches of a trend line, and they would say that this, okay, this is a valid trend line because it has been touched once, twice, 3 times, okay? So as I've wrote here, this is held for 3 touches so far, so this is what can be called a confirmed trend line. If price breaks down below this trend line, okay, so what I'm referring to here is if price breaks below the trend line after 3 touches, then you would be looking to either close out of a long. If you're in a long, you would look to close your long here, or obviously take that short of it breaking down, because this should be support, and one would hope, if you're bullish, for that to get another bounce and go up, okay? and now the way that I trade the trend lines. Okay, so 1, 2, 3. Many people will look to trade this fourth touch. Okay, so I personally will always look to buy the third touch. Again, you want confluence. You always want confluence. It's not just buy the third touch of a trend line every time, but if you can have some confluence going into the third touch, then yes, that would be your buy, not necessarily waiting for this fourth touch. Okay. So this was a lovely example. So this was wrote up yesterday, okay? So I would buy the third touch, whereas many would wait for this, but instead buy the confirmed fourth touch, okay? So e.g., 1 touch, 2 touch, I would look to buy the third touch of a trend line, okay? Okay, so I hope that's made that really simple, because obviously when you've only got 2 touches, and I'll go through some examples for you all as well in a second of loading up a chart, that many people would look take 2 touches like this, they wouldn't buy the third touch, they would wait for the fourth touch, okay? But I personally will look to buy the third touch and buy on the trend line touch that obviously would make it a confirmed touch, okay? As you can see here, this would have worked. In hindsight, yeah, very nice. We got that third touch and price expanded up to 10,950, the top of the move, obviously. Okay, and look here, okay, like saying, I would enter a short upon price breaking down from the trend line, back testing it as resistance and then breaking below the low. That means you lose the trend line as support and you close below it. You then come and back test the trend line as resistance and then you break down below the low of the support. That is a short position entry. Definitely you would be taking definitely taking profits if you were in a long, okay, but at the very least taking profits, but preferably if you have access to shorting, then you would look to short that, be it stock, coin, whatever you're trading, okay? This is obviously theory that can be used across any market, okay? But let me just mute this a second. There we go. So yeah, many people will wait for a trend line to be confirmed before they will take a trade from it. For a confirmed trend line to be classed, as confirmed, it requires 3 touches, okay? I will trade the third touch, whereas many will not trade the third touch, okay, and they will wait for it to bounce from the third touch, thus having it confirmed and try and trade the fourth touch, okay? What can happen is now that, so this was just lovely, so what can happen is now the trend line is confirmed, too many people are watching the trend line and it becomes a crowded trade and it becomes less likely to hold. So what do I mean by this? By being a crowded trade, what I say by this is when everybody starts watching and wanting to trade the same pattern, the probabilities of it holding or the probabilities of that pattern playing out are extremely lowered, in my opinion, yeah? So it's like typical anything, yeah? So when let's say you're on Twitter and you start seeing the same chart posted absolutely everywhere, just like the triangle is starting to become really crowded, but when you see a pattern that everybody starts watching, yeah, it's not going to play out. And I guess the best examples are head and shoulders patterns. If you can spot a head and shoulders that relatively low amount of people have actually spotted it, they trade really well. But if you log on to let's just say a news website, Twitter, or some form of circulation, and it's highly circulated pattern, yeah, the probabilities of that playing out are really, really low. And if you start having the same technical analysis as everybody else, probably something's gone wrong, because it's very unlikely just the sort of the theory that the masses lose. So if you start seeing X, Y, and Z Bob down the road posting a chart pattern that he's got off of the internet because X trader has posted it, then it's probably really low likelihood to play out. So what I mean by this is that everybody that was looking to trade this fourth touch, that becomes a really crowded trade with everybody looking to trade it, and there's more likelihood that you actually break through, wreck everybody trying to trade the fourth touch, and move to the downside. Why was this such a nice example that I wrote up here? Because this is exactly what happened on Bitcoin yesterday. So this was literally this pattern exactly played out. We lost it, we backtested it, we moved down. And this is what I mean, well, of a crowded trade of everybody wanting to trade it. So that was what I made yesterday, and this was the results today. Yes. People waiting for the confirmed buying of that fourth touch obviously lost the trade. They it got smashed straight through that trend line. But did it get smashed through totally? No. If we actually look here closely, the trend line lost its support. It got back tested. So let's load up the chart. Let's Okay, so what we can see here, this was the trend line that I'm referring to in those photos. This trend line here, which you can see touch, 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 touch. Okay, so it's a confirmed trend line. And what we can see here is when we zoom into the 15-minute chart, what we can see is really, really nicely that trend line was lost. Okay, so lost as support. It is now confirmed, or one would expect this to now backtest as resistance. So you close below it, you come back up, you backtest it as resistance, and look at that. You just get a really nice move to the downside. Obviously, if you're market shorting, who knows where you got filled. I was asleep at this point, but this was obviously happening for me at 3 a.m. in the morning. But nevertheless, that's exactly as I would expect it to play out. Lost, backtested as resistance, confirmed as you take the lows, and look at the move down. I mean, just a real swift move to the downside. Okay, really swift move to that downside there. So yeah, that's a trend line playing absolutely perfectly as just a really, I loved it how I was writing this up yesterday, and then it played out as I personally would expect it to trade. So yeah, that's obviously, yeah, you lose a trend line. So it's 3 touches for a confirmed trend line. Okay, forgetting about the example, 3 touches for a confirmed trend line. I will look to trade the second touch of a trend line. I will look to trade obviously the second, buying the third touch of a trend line, because generally the fourth touch actually has a less likelihood to hold as more people start to watch it. Obviously, you don't always want to trade into the thinking, oh, if everybody's let me change my words. If just because everybody's looking at something doesn't mean it has to not work, I guess. So don't just think that all the time. But yeah, generally speaking, that's just a generalization I made, I guess. So don't hold me to my word on this. But yeah, basically, yeah, I will look to trade the third touch, not necessarily the fourth touch. It would all depend there in the moment, or what you could do rather than just placing a bid there. Actually, wait for a bounce and a little confirmation. Obviously, you can see here it just literally smashes pretty straight through it. Yeah, okay. So yeah, that basically is a standard trend line. Do you need to look at lower time frames to see if price closes above or below a trend line? Good question, Nelson. So I would say it kind of depends the time frame that you're trading on. Okay, so what we can say is, when I was writing this up for an example, this was obviously taken from a 60-minute chart. Okay, a 60-minute chart. If your trend line is taken from a 60-minute chart, let's say 60-minute or 4 hour less. Okay, so if you're trading on what's classed as a low term time frame trading, yeah. So 1 hour, I'd say really 1 hour less, 4 hours kind of swing trading. So 1 hour less, okay? If you're trading on the 1 hour less, okay, and you're seeing your touch points on the 1 hour, well, you can use like a 15, let's say a 15-minute chart to confirm, okay? So would you look at lower term time frames? Yes, I would. If you're trading on like a 1 hour chart, then if you start seeing it close below on the 15-minute chart, well, that's a confirmation that it's lost, because you're looking at a trend line that's a low-term time frame trend. Okay, but say your trend line is taken over the span of months and it's a long-term trend line. Okay, a really respected long-term trend line. Then I wouldn't be looking to short with a 1 hour close below. I'd at least wait, for example, for a daily close below before I said, right, that is now broken as support and is now resistance, and then I'd look to trade the short, the back test, say. So let's pretend that this is a monthly chart, okay, and we can see on the monthly we've got 1, 2, 3 touches. This is like a 2-year long move, okay? Well, it'd be more than that if this was a monthly. Let's just say, okay, we're looking at a monthly chart. We got a nice 10-year move going on here, and you're not going to look on a 10-year worth of data trend line from a monthly chart and look to short with a 15-minute close below. So you'd be at least waiting for a daily close below that, okay? So it kind of depends what time frame you're trading, but yeah, if you're on the 1 hour minus, yeah, 15-minute minus close below it, I'd then look to trade or short the back test. Or really, what I like to do is, rather than just shorting the immediate back test, because obviously you can just do that. So what I prefer to do is see something like this, move down, back test it as resistance, then I would look to short as it broke down, okay, and then as it broke down, yeah, that would be my entry signal, because it's just, you do see a lot of fake outs where you just do that straight away. So obviously then if you're looking to short the breakdown, you never get your entry. Whereas if it does that and you short the breakdown, then you take less of a risk of just it being a fake out or a deviation from your trend line. So yeah, I look to short the breakdowns, and that's what's really nice obviously about that is that on Bitcoin, obviously you would have made some nice profits there as you short that breakdown, and you know it totally rolls over there. It's still kind of rolling over now. So yeah, that's pretty nice. Cool. So moving on to the next trend line pattern. Okay, then if it's 4 hour, you look at the 1 hour. Yeah, so if I was looking at a 4 hour trend line, I would wait. Well, it kind of all depends on context. It's really hard to just give an exact answer for a 4 hour chart. Let's say if it's a 4 hour trend line, which is also sitting at really strong horizontal support, I'd actually then wait for a 4 hour close. But yeah, it's because 4 hour charts is not really a chart for day trading. You're not really a day trader on a 4 hour chart, so I would wait for then a 4 hour close, if I'm honest. You could go down to the 1 hour and try and get in there quick, but I would personally say it kind of depends on the level. So like this was a stronger level if you look at it, because you also had this. Okay, so you did also have that, and obviously, so this, when it closed back below it, it kind of closed below both. So then you could say if this was a 4 hour chart, we're looking at the 1 hour close below there, because you closed below all of this at the same time, would be worthwhile. So to give a really concise answer is very difficult for your question, but I would say if you are a 4 hour time frame trader, then looking at the 1 hour is really beneficial. But you don't really want to be trying to jump the gun. I would say, you know, you can come down to that 1 hour chart, but if you're a 4 hour trend trader, then I would definitely wait for that confirmation. Yeah, you could do that on the 1 hour chart. So I guess to answer your question, yes, if you're a 4 hour trader, you can look at a 1 hour chart for looking for a 1 hour close below, retest and breakdown. 1 hour chart should be fine. Because generally speaking, if you trade on the 4 hour chart as your main chart, you use the 1 hour chart for your entries, like Pacific entries. So yeah, it would be, sorry for giving this really going out of the woods answer, but yeah, basically to answer your question really easily, yes, you can use the 1 hour chart as that confirmation if you're a 4 hour trend trader. Do you always draw the trend lines above the wicks? Yes, I always use it from the wicks. So personally, it's not necessarily a right or a wrong answer. You can use the candle closes. You just have to be concise and consistent. So consistency is the most important. I wouldn't start taking wicks here and then combining it with candle closes. So if you start from wicks, be consistent and use wicks all the time, or if you use candle closes, then be consistent and join up with candle closes. But I much prefer using wicks. Okay. Does volume have to increase a lot at the break of the resistance trend line? Yeah, the answer is yes. You should see a volume increase, okay? So as you break this trend line, what you're going to want to see is that volume increase, especially on the breakdown. And as you can see here, you got the volume obviously massively increase as you broke down. As you can see here, this is obviously on the 15-minute chart. As you broke down here, you did have an uptick in volume. So obviously this is our 20 moving average on the volume. So you did have a uptick in volume. Okay, so we did see an uptick in volume here to give you a warning sign. That's obviously nearly double the amount of volume that we had seen. Okay, but then obviously as you break down fully, you know, potentially you could get in a little bit late, but I would just do it as soon as you broke down from there. That's as much confirmation as you need, and then obviously later you would have seen all that extra volume coming in, just to give some nice moves to that. So yeah, that answers those questions. So moving on is what's known as the 3 trendline fan break, and I actually enjoy using this, and I don't feel as if many people trade using it, okay? But basically the way that you use the 3, I'll read out what I've wrote for you all here, okay? But essentially you take, this is best on the high term time frame, so this is not really like a day trading strategy, so you wouldn't be looking at this on the 3 minute, although you could. I do not use this for like scalping on the 3 minute chart ever. Like if you look at this on like a 4 hour chart plus, so 4 hour / daily charts, yeah, it works really nicely. Okay, up to weekly charts, like, you know, it works best on high term time frames. But you always start from the same place, so you would have like a pivotal high, let's say a pivotal high, and connect it down to the series of highs. Okay, so what we could imagine here is price is being held down by a downtrend line. Okay, so you've got your downtrend line, and I know so many people like to trade with trend lines, including myself, because I find them really helpful of deciding the strength of a market and just deciding when a downtrend's over, essentially. Okay, and so this might be a really nice addition to your arsenal, I believe. Well, it is for me anyway. But yeah, so you start at the high and you will connect a series of highs. Obviously this is a picture perfect example because it's not a real example. I've got some examples here in a second for you of live charts, but So yeah, basically you connect the highs and you're going to connect the series of highs that are forming the downtrend. Okay, so we can say that this is going low, lower high, lower low, lower high, lower low, downtrending, and we've got our clear resistance trend line that's holding down the trend. Okay, so what we can say is the first downtrend trend line keeps the price in a downtrend during an extended time. Price here finally breaks through this downtrend line. Okay, so price will finally, at some point it's going to break through the downtrend resistance line. Price will break through that resistance line and form a new high. Okay, so that new high will get you a new trend line downtrend resistance. Okay, what price generally will like to do is come and back test this first trend line. So your first trend line resistance then gets back tested as support. Okay, and you'll want to see a new move to the upside, okay, which is going to give you your third trend line resistance. Okay, you will then come and make a new high here, and then another downtrend where you would like to see. Obviously it's never going to be this picture perfect, don't expect exact touches, but you're going to come down and want to see the second trend line hold then as support. Okay, so then what was obviously resistance flips to support, resistance flips to support. Okay, price then goes through line number 2 and forms a third top. Okay, and retraces back. When price breaks through trend line 3, this is a confirmation in a reversal of trend. Okay, so this would be your overall long signal where one would say, okay, downtrend has reversed and we are now looking at a strong uptrend where dips should be bought because you have gone over the 3 trend lines that are holding down price. Okay, so this is used for a confirmation bias that, okay, you are now, you have to remember, if you're looking at this on the grand scheme of things on a large trend, you would say you've ended a bear market and started a bull market. Okay, so that would be a way of confirming whether you're in a bull market or whether you're in a bear market. Okay, so that's one way of confirming, confirming in brackets whether you're in a bull or a bear market. Okay, and this would be a strong confirmation that you're in a bull market and you should stop looking for shorts all the time and really look to long dips. Okay, so this is a really nice way I find of trading it. Yeah, it doesn't have to be on like weekly time frames. You could use it on like the 1 hour chart. There's nothing wrong with using it on the 1 hour chart, but obviously the trends are going to be you're not changing a 1 hour trend and mean, oh wow, we're in a bull market. Use some common sense, I guess. But yeah, you can use it on the 1 hour. On that volume question, you once said that you use those volume websites which show you sell orders or buy orders on exchanges at pivotal points to confirm trades. What do you look for at those moments? I'll take that question at the end because it's a little bit off topic, but I will take that. Remind me at the end of the live stream. Post the question again and I'll answer it. Would you use log scale for the trend line fan break? As mentioned, higher time frames. Personally, no. Unless, obviously, I guess it kind of, generally speaking, no, I won't. If I'm honest with you. So I generally won't use the log scale. I only like to use log scale if something is, I guess Bitcoin is extremely volatile, but I would generally not use this on a log scale, okay? Because we're looking, say, for 1 year data. I personally use the log scale when I'm looking back, looking back on something that has several years of data. And generally speaking, if I'm looking from a high to my low points, I wouldn't switch into log scale to answer the question. So yeah, I would just use this on standard. Wouldn't switch to log for this method. You could do, but I personally wouldn't. Unless there's a real specific example, I can't think of one offhand of where I would switch to log scale for this. So yeah, really the answer is no. I just don't do that. But obviously you could switch to log scale and see how things line up. But yeah, I generally won't, because I only use log scale if I'm looking back through history of a really volatile stock. And yeah, generally speaking, you wouldn't need to do that if you're looking like, say, 1 year of data, 2 years of just like from here onwards into the future of this. Yeah, you're generally not going to need to go into log scale. Okay, so this is a few examples. Obviously, this is one on ETH. This is on the daily chart. Okay, so quite irrelevant. And obviously, we have only done 2 here. So we've obviously got this first downwards sloping trend line, which, as you can see, again, it's not picture perfect, but what we can see here is resistance broken to form a new high, backtested support, bounce, back tested the support somewhat and another secondary bounce here. Okay, so what we can say is this first downwards trend line, which was resistance, has now flipped into support, and it created our second downwards trend line, hasn't it? So from this second downwards trend line, we have then seen resistance, okay, come back down. We're going to have to zoom in on this obviously now, but it has somewhat been broken again. It's still acting as resistance at this point, okay? So we are still finding a secondary fan line at this point. So this is like a live one on ETH, okay? So what you would want to see is a bit of separation. So a move, let's just say, off of hand to a move up to around $215, okay? Or let's say $220. And then once we've seen some separation, okay? So once we have seen some separation, let's say get rejected here again and we come back up and then do this. Well, then once you've got that, you would then draw your last trend line like this. Okay, this wouldn't be a change of trend from obviously a bear market to a bull market, but it would show you that once you've broken that, then you should be looking for long positions because you've done your 3 trend line break. Okay, and again, it's all to do with context. It's really context dependent, but yeah, generally then you've broken your 3 downwards trend lines, you should be looking to, you know, take long positions really. Okay, on that stock or on that coin, whatever you're trading. Okay, so yeah, that was a example on ETH, and then we got this nice example which was on Dusk, and obviously this is on the 15-minute chart. Okay, so on the 15-minute chart here, obviously you can use it on any time frame really, but it's best used on the highs. But this is a nice example for the 15-minute chart. Okay, so here we have our high, and what we can see is this trend line was acting as resistance, and obviously in the end you find support for the 786 here and bounce. So what we can say is there's our resistance trend line, isn't it? Really nice. Resistance, and you break it. What do? You break it, you form a new high, and then you back test trend line number 1 as support. So then you go resistance, broken to form trend line number 2, support, and then that trend line that was resistance is then support, and you form a new high. Okay, and then you form a new high. Here, you don't backtest trend line number 2, but you obviously do backtest all of this. Oh, how do I do this on this? Here we go. You obviously backtest all of this. So this old support, resistance, flips back to support. Okay, obviously being that 618 level there. You backtest that, you break the trend line, and you shoot back up to where the move began. So this was a nice example on the 15-minute chart, and this was like about a 10-12% move, so a decent move to the upside, and obviously that's from taking out trend line number 1, and then trend line number 1 going to trend line number 2 resistance, coming back to trend line number 1 as support, moving up, taking trend line number 3, coming back, not back testing the trend line, but back testing this support, resistance, support. So there's an SR flip. It holds that. It takes out trend line number 3, and you can see here, this is the 15-minute chart. So you have 45 minutes of closing above. You then take out this high, obviously being the trend line number 3. You then back test it here. So you get a close above, back test the trend line number 3, and you get expansion to the upside. Okay, so that gave about a 12% move. So that's obviously nice day trades. Yeah, so that's obviously the trend line fan break. Okay, so you want to just line up the highs, then expect number 1 once broken to number 2 to act as support, move up for number 3. Nice to get a back test on number 2, but obviously use context. Is it likely to come back to here? If, you know, what I would say in this example is if price come all the way back and back tested this, it's not bullish anymore, because what can you see here? High, higher low, higher high, higher low. So it was in bullish market structure, wasn't it? So you obviously had here bullish market structure prior to the pump. Okay, so if price had come down and back tested here, well, that's suddenly not bullish market structure, because you'd have obviously taken out the low. So, you know, use context basically, and then, you know, you close above here, you close above trend line number 3, so resistance of trend line number 3, broken above, close above, back tested here, expansion to the upside. Okay. Do you use fib channels to know your retracement when price breaks trend line 1? No, so I do not use fib channels in this example. I will show you a whole lesson on Fibonacci channels, but yeah, in this scenario, I wouldn't use a fib channel for this. Yeah, definitely not. I may be in a tube at the end of this stream. Please can someone remind down on my question. I hopefully won't forget, but I honestly can't promise anything. I'll be honest, my memory is not great, so hopefully someone else can remind. Doesn't need. Wouldn't you use the first swing low, high wick on dusk? You mean here? Let's see. I think, like, for example, if we connect this. Yeah, I guess you could. Like, connecting one, it doesn't backtest as nice. I guess this is like where it comes into discrepancy. So what we could say is this trend line is not, well, I guess it's respected here, and then you go 1, 2, 3, and this is like a redundant one then. Okay, so yeah, nice eye, but in the end, I guess it leaves you to the same example of going long, but you would have just got into your long shorter. But yeah, that is a respected trend line as well. So we can see here it was resistance, support. So obviously if you take your trend line here, you would have got into your long sooner and got a little bit more to move, because then you obviously see 1, resistance, back tested, 2, resistance, back tested, 3, resistance, broken over, and instead of longing, you know, if you take your trend lines here, instead of longing here, you get to long here, so you get a little bit more extra on that trade. So yeah, basically to answer that, yeah, that looking at it, that would have been a nice trend line to take, and it would have all given you the same example, or you would have just made a little bit more profit, to be honest. So yeah, good eye. Doesn't need all trend line touches being based on wicks. Doesn't need all trend line touches being based in wicks, or do you use a trend line that includes all wicks as possible for dusk? I would, little bit confused on your question, but yeah, I would say you're looking, for example, like here, this is obviously a trend line that's respected. So here, when you're getting like closes above, I think this is what you mean. But basically, for what you're looking for is a trend line is initial like strong resistance. So this is initial strong resistance. So you could have taken a trend line there, to be honest. But you're looking for like initial bounce and a rejection down, like a strong rejection down to give you a trend line. So then like that's where you would then look to then obviously sell number 3. So if you could short, well, there's touch number. Or here would be touch number 1, here would be touch number 2. Look to get in on touch number 3, and then obviously people that are waiting for touch number 4, they obviously goes through. But yeah, for that trend line, you're obviously, yeah, you're just connecting the highs of the initial move and then expanding down. So here you take your trend line, expand it to the high here of the wick, and then you just move it down as far as you want to go. Okay, on this trend line, you move it to the high and you then just expand it down again from here, put it to the wick and just expand it down. So you're just looking to go from high to the wicks and expand and just let it do its thing. High, okay, initial high to the wick, expand down, high to the wick, expand it down. Okay, so I hope that makes sense. And yeah, no worries, Martin. So yeah, moving on. If you have any more questions, then just let me know. But yeah, moving on to the trend line of 45 degrees. Okay, so as I said here, I just wanted to highlight that I do not use this tool, but I obviously know the theory behind it. But yeah, this is personally not something that I actively use, if I'm honest, ever in trading. Okay, but it's still something useful to be aware of. Okay, you still you know, it's obviously knowledge is still good to have about this, I guess. Okay, so basically with the 45 degree angle, it's kind of like Gann, you know, he kind of made up all of this, well, not made up, but you know, he's the founder of it. But yeah, basically a trend. So when you're looking at a trend that's moving forwards, okay, or moving up or moving down, so obviously here what we could say is when trend moves at a 45 degree slope, okay, that is a healthy trend and the uptrend can continue. Okay, so that's obviously here taken in green, 45 degree angle here in green. That is an uptrend that if price is moving up and respecting this trend, one could say it's a healthy trend. Okay, if price moves above a 45 degree angle, e.g. in this blue line, well, that's a parabolic advance and the trend is not a healthy trend and it can turn around, or if and when it turns around, it would be a devastating move to the downside potentially. And also, if price moves in an uptrend but lower than a 45-degree angle, then that is called a weak trend, and it's not sustainable, and it's likely just some form of relief rally, and it's going to fall down again. So what you're looking for a healthy trend is a 45-degree move to the upside, angle moving up at 45 degrees, and that's what your class as a healthy uptrend. I do not use this tool in my analysis, but nevertheless, it's, as we were on the topic of trend lines, I thought it was worth adding it in for if you're interested in studying or using Gann theory, then this is kind of obviously he'll use the Gann square, and I can teach about that as well, but I don't use it. But yeah, it's still a good bit of knowledge to have. Okay. Yes, we're talking about that. Thanks. Yeah, no worries. Do you take two close wicks into counting, like a bullish wick followed by a bearish wick? Do you take two close wicks into? So I would use whatever the highest wick is, Nelson. So if you had two in a row, I'd take whatever that highest one is, bullish or bearish, whatever the highest one was that formed obviously the high of a rejection. Cool. So that's, yeah, the 45-degree angle. Yeah. Okay. And any questions about this, let me know as well. Okay, so then obviously you have internal trend lines. So this is like an internal trend line, obviously from a weekly chart here that goes through data. So trend lines are still absolutely valid when they go internally through price. So here you can see on Bitcoin that you have a low that comes up and it's then acted as resistance, support, a potential resistance. So this is what's known as an internal trend line, okay? And especially if this is taken over a long amount of time, you don't need to have a trend line, for example, that goes and connects lows only, okay, or highs only. You don't have to do trend lines that only do this. Okay, as we all know, this was our bump and run pattern coming into trend lines again. But yeah, just so you know, internal trend lines are absolutely fine as well. So they do not connect overall lows and highs of a trend, but are drawn through price action to connect as many lows and highs as possible. Okay, so obviously you're connecting as many lows, highs, lows, highs as possible, and that's still a valid trend line. Okay. So any questions at all, I will go through some examples. We can just load up some charts and go through examples. This is nice. Bitcoin still moving down. Litecoin finding a little bit of support. Okay, cool. I just wanted to quickly check what's going on there. So yeah. So does anybody have any questions at all about trend lines? Do you take... Oh, yes, I already answered that question. So I will go back to that question that was asked earlier. On the volume, you once said that you use... So he's referring, by the way, to this website here. You once said that you use volume websites which show sell orders or buy orders in exchange at pivotal points to confirm trades. What do you look for at those moments? So, for example, what we could say we could look for is, for example, when price obviously lost here, for added confirmation. I would never base a trade off this, by the way, but you can use it off of confirmation. So if we was obviously looking to go short here, then if we also see many short orders, obviously we've got nothing yet, but if we suddenly start seeing big 10 million, 5 million short orders also coming in at the same time as when we're wanting to go short, well, that's obviously nice to see. Big orders coming in at the same time as you, so it's another way of seeing confirmation. If we start to see that back test and people start piling in on shorts, yeah, it's another way of adding confirmation that obviously that's a level that people are wanting to short. So yeah, I would, just so you're aware, I would never ever base a trade purely off of this. That is so bad idea, because people are really done with money, by the way, and you will loads of times see 10 million orders and they get it wrong. So never base a trade off of this, but yeah, you can use it as another form of seeing, if you want to see a resistance hold and you also then see big orders coming in, then it's nice to use that confirmation, isn't it? So yeah, basically I just use it as that, a little bit of confirmation, really. Cool, so that's that question. Can you give us a link to that website? Yes, I will link you that website. I'll put it in the chat now. It's a nice website. So here you can see like people are doing little orders. I wouldn't really take any notice of anything under 1 million personally. Like, I wouldn't care less about what these orders are doing. So I only ever look for mil plus. But yeah, there's the website, and it's quite nice. You can obviously just see when big orders are coming in, basically. So it's another way of using confirmation. Like, let's say you wouldn't want to go short here if you start seeing 10 million orders come through. You know, it's probably not gonna it's probably just gonna be a fake out then, isn't it? If you do this and you start seeing 10 million, 10 million, 10 million, 10 million coming in, then it's probably a fake out and it's moving back up. Whereas if you backtest and you see 10 million, 10 million, 10 million shorts coming in, well, you know, it's just adding, you know, you were going to short this, look to short this anyway, and then that's just like backing you up a little bit. So yeah, but never ever use it on its own. It's really dangerous to do that. Cool, moving on. Okay, so moving on is what I wanted to go over. Finish off from last week's stream, obviously the scalping strategy. If anybody, yeah, it tells you across the top sites. But yeah, if anybody has any questions regarding the scalping strategy, which I covered last week, please ask any questions that you have now. But I would just like to show just a few examples from today of how it traded nicely on Bitcoin, and how, for example, you want to wait for some confirmation where you're taking some of these trades, okay? So as you all know, I was very bearish on Bitcoin and done an amazing short, but nevertheless, price is still going to bounce up at certain points. Okay, you can not only ever short a market, so there's obviously opportunities for longs. So this is an example of not longing every single close outside of the Bollinger Band, okay, because that is a little bit reckless if you're in a downtrend to continuously only be looking for longs, okay? So this is where we're looking for a little bit of confirmation, and as you'll know, I pointed this out to you, this is a 3 valley pattern. So you got valley number 1, valley number 2, valley number 3. What do you do? 1, 2, 3. Then that's adding a little bit of confirmation. You've done 3 valleys. The valleys are not really getting much follow through. Also, you had bullish divergences here. Okay, so that's enough reasoning then when you get the third move down to look for the long, obviously stop below the low. And what one could argue is this is giving me a 1.35 risk to reward, okay, which is obviously not something that I preach as something that I would take. I generally say I'd only take 2 to 1 plus. But when you sort of get this scenario of a pattern confirming with a move outside the trends, okay, for that, obviously this is just a scalp trade, you have the odds in your favor, okay? So this was live posted and I live took this trade, okay? And with the same, obviously this was 10 a.m. this morning, this did trade exactly as expected, okay? So you got the 3 valleys, you get your target to the 26 EMA, and price in the end moved a little bit beyond it. Obviously it was shorted back down again, but yeah, that's just an example of waiting for other forms of confirmation. Like I said last week's stream, you do want to use add complexity to the strategy of not just blindly longing and shorting every single move out of the Bollinger Bands. That would be too easy, yeah? So then this example, you know, we're waiting for another form of confirmation. Obviously, this was the 618, so you wicked onto the 618 and you closed outside of the Bollinger Band and you had 3 valleys. That's a really big form of confirmation that there we have a low risk to reward, but because of the support that you've got there, it ends a nice trade. Okay, and then we actually get another go at the 3 valley pattern. So here we have valley number 1. So this was later in the day. Obviously, this was the 3rd here. Trend line moving through it. This is an exact trend line, by the way. That's from the very low to the very low to the lows here. Okay, so what can we see here? Valley number 1, valley number 2, valley number 3, holding the wick exactly onto the trend line. So this was a perfect trend line. So number 1, number 2, number 3. Okay, so what we can do is look to long here and obviously then come down to our time frames. So this is from the upwards view, 1, 2, 3, coming down into it here, 1, 2, 3, you know, stops below the low, aim up for the 26 exponential moving average. Okay, as you can see, this is the little bit zoomed in, but this was all live, by the way. This was all live. Okay, this was a move. Okay, 3 valleys. Look to the 26 EMA. Again, the risk reward is not 2 to 1, but you have odds, I would say, in your favor of a bounce. Okay, and obviously here again, you hit target perfectly. Okay, so that was literally just 2 examples of when you're trading against the trend, but while you're waiting for a little bit of confirmation, rather than just longing every single move out, well, wait, for example, for it to come down, hit a trend line, hit a trend line, hit a trend line, or just, you know, it's adding that form of complexity, so to speak, into the strategy of not just taking every single trade, you know, and using it with another form of TA, okay? Using it, for example, coming down with bullish divergences, coming down onto a weekly level, coming down onto a fib level, not just taking every single one. Yeah. Does trend lines usually work as well in other markets? It's a simple strategy, and in other markets there aren't many new. Yeah, to be honest, yeah, they do. Trend lines work in all markets. Yeah, so I'll happily use them in stock markets, in commodity market. You know, honestly, yeah, they work across all markets. And yeah, there's obviously noobs in crypto. There's not as advanced traders, but yeah, you'll be surprised. Like technical analysis, even by professionals, it doesn't have to be difficult. It just has to have an executable plan. But yeah, just think. So I guess a really good example is gold. Like how easy is this? So really, 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 really easy example of giving you a nice example of something outside of the market. If we look at gold, okay, look at this. How easy is this pattern? Like literally, that's the easiest pattern you've ever seen in your life, isn't it? So really, really easy triangle. Okay, well obviously here we had the nice ABCD, and then we obviously had a really simple triangle. Okay, what is that? That's a trend line resistance. Okay, really simple trend line resistance. Obviously it's forming in an ascending triangle, but you get to around the 50% midpoint of the triangle. I would say that's 50%. Okay, around 50% midpoint, and then you break up from it. Like really, really, really simple patterns. You know, this is obviously gold, massive, massive, massive market, and that obviously gives a very nice move to the upside. And I would argue that's a really simple pattern. To be honest, everybody was watching. So this is where I went up against earlier. Everybody was watching this, and it was just the easiest money in the world, to be honest, and that was a trade everybody was watching, but it played out. So but you have to remember that this is a really long forming pattern, so this has been going on for a long time. Okay, and you know that's been drawn out for a couple of, you know, over a few years now, so this has been a long drawn out pattern. So everybody was watching it, and that's why really the follow through was so nice. Okay, a really nice follow through, to be honest. But yeah, that's just an example of, yeah, trend lines can work in other markets. Yeah, although they're simple, they are effective. So don't get hung up thinking they're too easy. It doesn't have to be like that. Definitely not. Okay, so what are the 5 EMAs you're using there? Okay, so the 5 EMAs are the 26. Okay, so what I'll show you here, this is the 8, 12, 26, 55, 100, and 200. Okay, I'll double click on that to show you. Okay, 8, 12, 26, 55, 100, 200. This is the Bollinger Bands, and that's obviously the background of the Bollinger Band. Yeah, so this is my own indicator that I made. So this is a custom indicator. Yeah. Could it be that we are just retesting the downwards trend line from the 6th of August that broke to the upside for Bitcoin? From the 6th of August. From the 6th of August. 6th of August. Retesting the downward sloping trend line. So you mean like, are we going to do this? I don't know. Yeah, possibly. Yeah, possibly, I guess. Could it be that we are just retesting down? Well, we haven't retested it yet, but yeah, we could do. I'll cover Bitcoin in a second. I will cover Bitcoin in a second on my viewpoint on Bitcoin. But does anyone else have any questions? So basically, if there's no questions, I presume that everybody's really comfortable now with trend lines, and when I move on to parallel channels next week, everybody is hunky-dory with trend lines, and there should be no more questions about that. Okay, and also the strategy of scalping, I presume if there's no questions about this, then everybody understands that as well, which is obviously good. I'm glad that you understand. Okay. So I will stay around obviously for questions if people have them, but I want to cover Bitcoin and Litecoin. Okay, those are the two that I want to cover now, specifically because there was a lot. It's my main trades, isn't it? So those are what I want to cover today. Okay. Okay, so firstly, nice lesson on obviously trend lines, what we can see here is very nicely resistance, resistance, resistance. You can also move this down and connect like this. Okay, then you're obviously getting those closes on the daily. Nope. Okay, so what we can see here, we've got a resistance trend line. I've moved this up to the top. Okay, resistance, 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 and then this potential support, support, e.g. are we going to get that third support line? Obviously there's another way of taking this like this. Okay, but I prefer this one here with just the 2. Okay, although you can extend it back. So nevertheless, all we can say is this is a form of consolidation now, isn't it? So this is really, really, really clearly consolidating. Undeniable. When you're just moving sideways, it's a form of consolidation. Obviously you're getting squeezed into an apex here, where this is either going to break out to the downside or break up to the upside. Okay, so you're just consolidating, and you're going to reach the well, you don't have to reach the apex, but nevertheless you're looking at a form of breakout. Okay, and it should come with a nice follow through. Okay, so as you'll know, I was did ladder up into this short positions. Obviously in the end we got a nice rejection from it, didn't we? So we obviously come here, we took the highs, okay, took the highs of these wicks and the 0.5 fib and got really nice follow through. Okay, if we are looking at that in terms of a 5 wave move down, then we've obviously only formed 3 so far. So we put in a 4 and a 5, just a standard 5 waves. I'm not going to go into Elliott waves at the moment, but you know, we could just say, is there one more wave to come here? Okay, because that looks impulsive. A 1, 2, 3 looks like a 4 for a 5th, to be honest, doesn't it? So yeah, ways that we can now be looking to actually trade this. Okay, so I still am in my short, although I took profits today. So I think I confused some people when I posted in the group about this. Obviously I posted in the group that I took profits. Okay, I did not close out the short fully when I took profits. Okay, I was just literally taking profits because I felt it was a good value for me. What you have to remember is I was in a 6-figure short. Okay, so I was in a pretty big short, if I'm honest. Okay, and this was a 10% rejection. So then when you're sitting on a healthy amount of profit sat there, it's not something I'm just gonna hold on to forever. You know, I want to actually realize some of that profit and have it available either to use or withdraw, you know. So I took profits for that reason. Okay, could we reverse it? Potentially, but do I think there's more downside? Yes, I do think there's more downside, but I have taken profits and I will hopefully look to compound this trade at a higher level. Okay, so where are we looking at resistance next? Where's a nice area to look for another short? Okay, or add to a short. Obviously one has to be looking at 10,250. Why 10,250? I think we can see really nicely here. Okay, just above what we got here, support, support, support. That support's now broken. That could be a potential SR flip. Okay, so really what we're looking at here, 10.3. Okay, so 10.3, 10.250 being the 382, 0.5, 10.350. Okay, that would be my area to look for a compounded short. Okay, where if price gets up this high, we could look to compound this trade. Okay, to trade that back down if you're comfortable compounding. Obviously I've done a lesson on that too. Okay, so that's basically the next trade I'm looking to take if price comes up to there. Okay, on the flip side of things, okay, I would actually look to close out early if price comes back above here, okay, and does this. I would be closing out totally. Okay, at this point I'd been out of it, because then price has just totally flipped us around. It's come back above this level and price should not be doing that really. Now it's come down and been rejected like it has. I wouldn't want to see that. And as you all know, for the bullish scenario, you do have a back pattern going on here, which is a potential at this moment in time. It's definitely not my preferred scenario. I still am expecting more moves to the downside, but we just have to be aware that we have also got going on this bullish bat, which obviously gives you a target around here. Okay, so you'd be looking for target around 12,000 if that plays out, but it's not my most favored scenario. Okay, and then obviously if that played out, you could trade it like this. Okay, so yeah, but that is not my most favoritable scenario. I am still looking at this bearishly and still fully expect another move to the downside, unless now 10.5's reclaimed. Okay, because what you do have the potential of this now is a low, a higher low, and a higher low. So you have got that potential, and then obviously you got the potential of this bat as well. But yeah, in my short. I've taken profits on my short, but I will add into my short. I'm looking to add in higher up, but if I do not get that opportunity, then I would then add on a breakdown of this trend line, to be honest. Okay, that's where I would add in a little bit lower. Okay, and that's just something I'd be comfortable doing. Okay, and as you all know, in the terms of Elliott waves, I am still looking at that in a W, okay, an X, okay, and obviously that was A, that was B, coming down for that C of a Y, okay, and if that is to be the high of the B now, then what can we say? That would be our 1-to-1 extension target for the ABC, sitting at 8,100, okay, 8,100. So yeah, that would be the target basically if this breaks down. So I am favoring this as this is my preferred count. Okay, really, that's my preferred count. I still think that we can hit 8.1. Okay, coming down, either preferably taking these lows. Okay, at obviously being target around 7,400. Okay, taking out those lows there. Okay, so why for me anywhere between 8,000, let's say 200 and 7,400. Nice target region for me. How I'm playing still, my preferred scenario is that we come down to this target box. Okay, then what else do we have holding us up here? We obviously have the 618 of the whole move as well. Okay, so that's what you call confluence, in my opinion. Okay, you've got the lows here, nice area to come down to. Okay, the 618 just above it, also the 1-to-1 extension sitting there. Okay, and also what we can take is just a simple yeah, so 10,600. Okay, so that's obviously another way of looking at it. From the bottom of W to the top of X, the 1-to-1 extension there sits at 7,600. So what we can say is this is starting to build up a nice scenario of breaking down, okay, and having this as our target box, really, around here. Okay, wouldn't want to see the 6.5, but around this sort of region is like a target box to have. Okay, does this mean, like as I said, you all know I'm in a short from 9,000 or 10,950. That was my top short. So obviously I was filling and laddering into this on the way up. I was laddering into it. My overall fill average was 10,700 and around 60 in the end. So 10,760 was my average fill, but obviously shorted the exact top of that move, so that was lovely. Yeah, and I've been very openly bearish about this. So yeah, I've obviously taken profits here, so I'm not in my whole position anymore, but I would love a move back up to add into that short then, to still play this back down. Next area of support then would be obviously your trend line, so you have to be aware you're still in the triangle until you're out of it. Okay, then if you do this, you're obviously coming down to this really tested support, which might get another bounce, but in the end you'd still expect it to come down to here. Okay, I think this support line here is now very, very tested. Okay, undeniably it's very tested now. Okay, so then we just would, if we lose that, then we're coming back into this, aren't we? Okay, so yeah, undeniably I'm still bearish. Okay, until invalidation. Still looking to get into some more shorts. Yeah, if that opportunity is presented, okay. And really now, if we start coming above 10.5, I would stop looking for shorts temporarily, because we could have the potential of that bat pattern playing out to around 12k potentially. Oh, let me take a drink, and I'll cover Litecoin for you all in a second. How do you smart sell on 3 commas, and how do you do it? The simple answer is it's I'll post you. I've done it like twice, okay, but it's really easy if you follow this guide. Like, to be honest, it'll be a lot easier to just follow this than me explaining it all, because they explain it really, really well. So I'll just send that to you. But basically, just follow this guide. It's actually quite easy, but yeah, you just obviously smart sell, select the price that you bought it at, enter it in and sell it. So yeah, that's one option. I've noticed the scalp strategy is also very useful to get entries in higher time frames. For example, coin breaking a trend line plus making higher highs in 15 minutes, and it usually retraces to the bottom of the Bollinger Band in 3 minutes. Okay, do you use it in some pump retracements? Generally no. Okay, so generally no. So do you mean like after a coin's pumped, used to buy? Oh, I see what you mean. So say a coin pumps and then you use this to buy in on a retracement. So obviously, rather than shorting the top, you look to buy on the 26 EMA. Yeah, you can do that. Because obviously, if you're shorting it, it's a short-term trade to trade it back down to there to obviously then trade it back up again. So yeah, you can use it on the reverse scenario instead of obviously shorting. Use it for entries of a long. Yeah, you could do that, or entries on a short. Yeah, you could definitely do that. What leverage and exchange was your last trade? So it was all trade. So my short was on BitMEX. Okay, leverage, cross leverage. EGGs cross leverage for scalps on BitMEX and standard. No, so I use cross just across the board. I just find it simple and easy. So I just only use cross really now. If I'm honest, I just cross margin trade everything. When a pattern has been broken, either trend line, triangle, or parallel, you made mention in uptick in volume. Yes. So for example, let's say we got a trend line here. Okay, let's say we got a trend line here. I'm just randomly taking this trend line. Okay, let's say this is our trend line. Okay, if we have our trend line, what we want to see is when price breaks through our trend line. Obviously, if we're looking at it bearishly, we want to see the bearish volume uptick. Okay, so say your candles of volume are like this. Okay, we break the trend line here. What we want to see is an uptick in volume as you break that trend line. That's adding to your confirmation that you've broken it successfully and it's not a fake out. Okay, say if you break your trend line and there's no uptick in volume and you've broken it and your volume is really low, then I'd say it's a fake out, or it just wasn't even a respected trend line in the first place, and price was not bouncing off of your trend line at all and it was a misplaced one. So yeah, volume is definitely used for confirmation. Okay, so you would definitely look to see upticks of volume. For instance, here you bounce off of a trend line. Okay, you bounce off a trend line, say, and you got an uptick in volume. So you could say, oh yeah, this is now nice, like, you know, nice bounce from my trend line, for example. But yeah, so you use trend lines with volume to say that it's a confirmed bounce. Okay, and if you get no volume off of the bounce or loss, then I'd say yeah, it's a fake out. Okay, and I wouldn't trust the move. Or it just wasn't a trend line that you were looking at, I guess. Cool. So let me cover Litecoin now. Litecoin. Ooh. There we go. Litecoin moving up again. Okay. So, so this was one that I obviously posted in the Champions group earlier. I'll try and find a post maybe. Or it might take a bit too long. But basically, yeah, we were looking. Yeah. So this was one that I was looking at earlier, and Litecoin is a really nice trade. Okay, this was a really nice, lining up really nicely. Okay, it was. So what can we see here? Now price is broken above here. This was obviously what I was looking at when I posted that I was buying it today. Okay, what we can see is I just loved the confluence between the USD chart and this Bitcoin pairing chart. Okay, so at first view, you look at the Bitcoin pairing. Okay, sorry, the USD pairing, and what can we say here? Price came down to the 618 and it's now bouncing off of the 618 exactly. What also is really nice is, as you know, I gave you this analysis. We were looking at this 382. We were looking at the 382 for a possible time when this could be ending its retracement potentially. Yeah, so we obviously had 1 2 3 4 5 waves up. Okay, from there we were taking out our Fibonacci time and looking between the 382 and a 0.5. What have we done today? We moved down to the 618 on the 382 exactly. So that for me definitely could potentially be a low. I would say do not get carried away and go all into this trade. Okay, but nevertheless, when I posted today that I was buying, people bought with me and obviously have done well from that, so well done. But yeah, like, to be honest, that was a decent trade, and I would like to also cover yeah, this was it. This is what I saw today. I'm not ashamed to say I FOMO'd into Litecoin when Daniel said he was buying, and then this guy also said, yeah, same, stop loss break even, good to go. Yeah, and I agree. Nice to see everyone making money. But yeah, you shouldn't always just FOMO something into something because I say that I'm buying. It's, I don't know, but nevertheless, I guess today was a nice call. But if you look here, this was my main reasoning, because as just shown, the USD pair hitting the 618 and this just holding support beautifully. So this was obviously the level that I marked out earlier. So I marked this out earlier as a support resistance, 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 and then we were looking at it here, support, support, support. I said I'm undecided if I want to buy at this level or wait for a weekly reclaim, and I decided after we saw this long wick that I do want to buy this. Okay, so we got in actually a really nice entry, which is now obviously sat in great profits. But yeah, that was the reasoning of buying in. I decided, okay, USD pair is sat here holding 618. Okay, Litecoin in the grand scheme of things when we come out to the weekly is at a make or break level. If this level is not held, I think it's game over in the mid-term for Litecoin. It would lose its most important support level. So as I wrote to you all and said, this for me is a make or break level for Litecoin. I do not want to see it close below there. E.g., this is the last trade I'm looking to take on Litecoin. I'm buying it. Okay. And with the same, we obviously saw the expansion here, okay, and then since we saw the expansion here, and then now what we've just done is expanded again to the upside. So is this a nice trade? Absolutely, it's nice. But let's see where we're running into now. As I said, we'd look to take profits at the 618, so that's literally hitting right now. So we'll see if it closes through this. If it does, well done. What we can see here, I guess, is this high. Okay, so we've obviously got this little bit of resistance right now. So it's, this is why it was a take profit region. And then obviously second, looking to just take the highs up here. Okay, and obviously in terms of the risk to reward of the trade was really nice because stops could literally have been below that low. Okay, so we were holding the level. You had to flush down straight back up. That's your stop loss. It's really simply that's your stop loss. That's your target. Okay, obviously giving a great RR. But yeah, that was the reasoning of that trade. Could this turn into a swing trade? Yes, this could turn into a swing trade. Let's say, for example, we now do this. Hold it, hold it, hold it, hold it, and we start closing above the overall target. Well, yeah, this could come up to then your monthly level. Okay, so then you're looking at monthly resistance up at 0.007841. Okay, so obviously that's then your next monthly level up there. If it starts closing above that, then that's when you zoom out again. Okay, and we still have this downtrend resistance line. Okay, so it's still obviously in that downtrend resistance line. So then there's more targets, but you have to remember that if we move up to there is another 12%, and then you just keep going up to levels. Okay, this has obviously been a beaten up coin, so the potential is there. The only thing why I say don't get carried away is because you do have to remember it's downtrending. Okay, so really anything below 107 is still in a downtrend. Okay, you could move all the way up here to $100 again and fall down. Okay, just is one of those things. I mean, I guess there is $84 you could fall down from. So yeah, it's like one of those ones. So I'm in the long. I made it very public I was in that long, but just don't get too carried away, I guess. Be careful, use risk management. You all know what, I'm not a financial advisor. Be careful. I'm up 90% on Litecoin. Yes, that's what I like to see. And oh yeah, so that's the guy posting here. So yeah, nice to see everyone making money on this. Can you check Cardano? I like that has a break of a very large trend line. Yeah, Cardano, as I got it here, I will. Yeah, so that looks like it's breaking. So I'd wait for that daily close above. Looks like it's gonna do it, to be honest. Yes. Cardano, I'm really not as bullish on as Litecoin. I've like cut down the amount of alts I trade now. Like have cut down heavily of the amount of alts that I trade. So I'm not looking to trade this. But yeah, I'd say you've closed out here. But let's see if you manage to actually do that one. Okay, then you're closing out of that what looks to be like a pennant, or just a symmetrical triangle forming. So I'd say you've still got this secondary resistance here of this symmetrical triangle. So just be aware that you've still got resistance at like 480. I'd personally wait for that to break. And I'm not so bullish anyway on Cardano, but I am on Litecoin. If LTC BCC loses the level, would you short it? Yes, I would short. Okay. Obviously, I don't know if you've been following me here long enough. If you have been following me here long enough, you will know on the on the USD pair, I shorted and was entering into that short. Obviously, reached it by $2. Where was my target? If you followed me long enough, you will know it was $148. And where did this top out at? It topped out at 146. So I've been playing this short for a long time, and obviously I've been closing. It's not as if I've held this one short, so I don't want to say that I shorted here and held it all the way down to here, because I didn't. But nevertheless, I've been really really spot on, if I'm honest, with this coin. Okay, it channeled so nicely. We had the throw over, we then lost it, we then back tested, and it was just absolutely perfect. But yeah, on the BTC pair, obviously over on BitMEX, if it lost this low, yes, I would short it, because that would be a real sign of weakness. Okay, if we lose that low, then yeah, that's a heavy move to the downside, which you could see for next support. Okay, and then in terms of like fib supports, you could start loading up here for confluence on that level. Then obviously it's the 1.133, down around here. So yeah, basically I would short it, absolutely. But yeah, that's not in my immediate plans. I'm long at the moment. So yeah, if you do start doing that though, yeah, I would short it, to be honest. But at the moment it's nice. Okay, and obviously we just have to look at our take profits. So if you took notice of what I said, we are currently getting rejected by that 618. So yes, obviously a good time. That was why I said it was a take profit basically to everyone. So take profit 618, then look for the top of the move. So you should have, if you listened, have done a take profit here. Do you always see a take profit hit and just go through? Yes, but nobody ever went broke taking profits. Okay, nobody went broke taking profits. I shorted Bitcoin, I took profits. Does that mean I think it can't go down? No, but you take profits, don't you? So yeah, there we go. LTC also running this trendline resistance short term. Let's see. Don't see this one. See, this was resistance broken today. Where's the one that you're looking at? Here? Looks like you're above it. I'm not too sure on that resistance you're on about, to be honest. Yeah, I mean, yeah, you don't have to take profits here. You don't have to listen to me, and you might go straight through the level and up to here. But all I would say is, yeah, you never went broke taking profits. Yeah. So this is obviously the challenge account, and yeah, I've been playing around on this a little bit, but this has been really untouched, pretty much since last week. So this is just my challenge account I play around on. Do on the Champions live streams. So I've been like playing around on this one as well today a little bit. But yeah, this is just going nowhere. So yeah, anyway, basically the plan is to try and get into that short around 10.3. And or see how it reacts at that level. I would wait and see how it reacts, because what I find interesting, you see here, the funding is going to go negative. Okay, so I like to use this as a metric, okay, and see how that funding changes. Okay, that's going to be pretty interesting. Okay, so today, obviously, longs are paying shorts, but that is soon to change in 8 hours' time when shorts are going to have to start paying longs. So just be aware of that. That funding rate's changing here. Okay, yeah, there you go. And also what you can, yeah, that's everything basically that I wanted to cover. From the 20th low to top, from the 20th low to top. Oh, I'm really confused. You might have to take a print screen and send me the URL a second, because I'm a bit confused by what you mean there. Profits, yeah, cool, everybody. Yeah, and look at that rejection. There we go, lads. There we go. What I'd like to see now is potentially do that. See how it goes, I guess. Could you do a quick cheat sheet on the funding metric? Yes, I can do that for you, by the way. I can do that. I will do that 100%. I'll do funding, and I will show you all how to understand open interest. So I'll show you all how to understand open interest as well, because that's another metric that I always am looking at. So I'll do a cheat sheet for open interest and funding rates. Do you care about fib levels of previous swing low to highs and vice versa, or always just the most recent swing? No, so if I'm looking at a move, I would take more than one's fib. Okay, so what we can say here is from high to low. This is where the breakdown starts, and this is not a great example. Okay, but we would have like this fib in, Okay, so obviously put that back. Okay, we would have this fib in from this high. I'd have this fib in as well from here. Okay, and then we look for confluence. There is a little bit here. Okay, but yeah, you have more than one fib on your chart all the time, so I would never just play off of one fib. That's not the greatest example. Let's try and find one where it's nice. Maybe ETH here. Yeah, so ETH, what we can say is break down to low. Okay, we could have this fib. Okay, and then you can start to add more as you break through. I'm trying to think of a really nice example. Where is a nice example of a fib? Oh, there isn't really a nice example of this. Sorry, I'm just looking through to try and find a nice example to that question. No, can't find one here. But basically, do you care about fib levels of previous swing lows and previous swing highs and vice versa? Yes. So I do care about previous ones. It's not always just the most recent. So yeah, I do care about other ones. So I'll take several fibs on my chart. And brilliant. So does anybody have any other questions? If not, I'm going to call it a night. On this. Okay, so yeah, I guess this is one, for example. So I would say this is where the breakdown started, so I would have a fib from where the breakdown started here, but you could also have a secondary fib. Let's say that this high was higher. Let's say this, because here it's relatively close, but let's say this moved all the way up to here, say, and then it broke down, it made a rise and then broke down, and I'd have a secondary fib as well on the higher the move down to the low as well. So I'd have like two fibs on the chart. Yeah, the most recent breakdown and the overall high, for example. But yeah, I'd take it from this one here, and we can see we're hovering around this at the moment. But yeah, overall I'd like to get around 10.3. That would be really nice to add, just because it's that really relevant level here. Okay, obviously they're coming up to the 618, but if you start closing above that, if this does this in the coming days and does this, well, then I would really start contemplating, as mentioned earlier, the bat pattern, which could potentially play. Oh, that's done incorrectly. I've done the wrong clicks. Obviously, oh my god, I'm going crazy. Where is my pattern tool? Here, obviously, which is what we're looking at for the bullish scenario up to the 886. Okay, then if we start doing this, and I'd say, yeah, let's play for the bat pattern, but until then I'm still looking at it bearishly. Okay, and then if it closes above here, then I'd really you're looking at 10, start closing above this region, then you have to be looking at the bat basically. So yeah, one step at a time. I'll give you updates of how I'm trading this obviously daily, but in the short term I would prefer to get a little bit of a rise here before a drop, rather than it just continuing to fall down, because as we all know, when something just falls down, it can retrace, and when something just goes straight up, it can fall down. So we'd like to see some like stair stepping down like this, really, to maintain the bearish scenario. And you have to remember, things can change instantly. It could go up like this tomorrow, and then I'd be like, yeah, change my bias, I guess. But yeah, in the short term, everything's going well. Everything is trading as predicted, which is really nice. And again, yeah, nice to see people making money on those trades. But yeah, take profits, trail stop losses, as this guy's doing, stop loss break even, do those sort of things, and protect yourself. Okay, and we'll see how this trades into the next week. So yeah, I don't see any more questions, so thank you everybody. I'll catch you next week, which is going to be on the parallel channels, one of my favorite things to trade with. Like, honestly, I love to trade parallel channels. Day trading, swing trading, it all. So it encompasses a lot of my trading. So yeah, I'm excited to teach everybody that, of how I do it next week. So I'll catch you for that one. And yeah, thank you everybody for joining me today. We'll see how obviously Litecoin and Bitcoin plays out over the next 24 hours. Preferably to the downside, but we'll see how it goes from here. Okay, thanks everybody. Cheers, and I'll catch you in I'll either catch you on the Discord if you're in the Champions, or if not, then I'll catch you in the stream next week. Cool. So yeah, thank you everybody so much, and I'll catch you then. Cheers. Good night. Bye.